Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for a bigger three-wave corrective structure, after which we then look for continuation to the upside. In this scenario, we have a finished three-wave move down in a wave W or a wave A, and now we're looking for a three-wave corrective structure to the upside in a wave X or a wave B. After wave X and B, we then look for a move to the downside, either in a wave Y or a wave C, where it is most likely for price to take out this low here at about 65.1k. Now the target area for your wave X and your wave B are visible on the chart. Target area for your wave X is between the 0.618 and the 0.9 Fibonacci taken from the start to the end of your wave W, giving you a target between 67.8 and 69k. The moment the 0.9 is hit, we get in the territory of a flat structure. The 0.9 is a common target for a regular flat, which is a 3-wave A, 3-wave B, and a 5-wave C. However, the most common flat structure is an expanding flat, and in an expanding flat, your wave B moves to the 1.236 to the 1.382 Fibonacci taken from the start to the end of your wave A, giving you a target between 70.5 and 71.2k. After your wave B, you're then still looking for price to move down and take out this low, as the minimum target for wave C most commonly is taking out the end of your wave A. Only if price moves up to the 1.618 here at 72.1k can we really lower the probabilities for both of these scenarios. On the 15-minute time frame, if we zoom in to this structure here, we need to see a three-wave corrective move in both a wave X as well as in a wave B. So if we then go to the 15-minute time frame, then what we are looking for here is a double zigzag. So in this case, we then have a three-wave structure to the upside, an A, B, C inside a wave W, three-wave corrective move to the downside in a wave X, and then again a three-wave structure to the upside, an ABC in a wave Y. Now the minimum target for a wave Y as well as for a wave C has been hit. That is the 0.618 here on my chart. The minimum target was 68k, which as you can see we have touched. Now the target up here is generally the more common target area for a C as well as a wave Y between 68.5k and 69.6k. The most bullish scenario is quite simple. We're looking for a finished three-wave structure to the downside and now impulsive continuation towards the upside. In this case, the move that comes off the low over here has to be an impulsive structure. So if we then go to the 15-minute time frame, then we have to be able to count one of these three structures with a good amount of probabilities. So let's cover them one by one. If we look for an impulse, we're looking for a wave 1, 2, 3, 4, a 5-wave structure. Now you can see that here we have then a wave 1, we have a 2, we have a 3, but we cannot count this 4 and 5 because your wave 4 is too deep. Your wave 4 retraced to the golden pocket, which is an invalidation for a wave 4. So therefore, counting this as an impulse, 1, 2, 3, 4, 5 doesn't work, and we are then left with a diagonal or a double or at least multi 1, 2. Now a diagonal is a structure where we're then looking for wave 1, 2, 3, 4, 5, correction, continuation. Overlap between a wave 1 and 4 is preferred. In this case, we then have a three-wave move up, that is your wave 1, three-wave move down, that is your wave 2. For a diagonal, your wave 2, however, is very shallow as it not even touched the 0.382, which is already an uncommon target for wave 2. After your wave 2, we then also need another three-wave structure in 3, another 4, and then eventually another 5 to create a bigger diagonal. At the moment, however, it is still too early to give a diagonal the highest probability coming off this low, so therefore, at the moment, not great probabilities. And then finally, we have a multi 1-2. Now multi 1-2 is an impulse, correction, and then eventually you get a big wave 3 towards the upside. So it's a 1-2, 1-2, and then boom, you get into wave 3. Now in this particular case, we then have to count this as a wave 1, 2, 1, 2, and then another 1, 2, and that's already your third 1, 2, and we are waiting for that explosive move towards the upside. But what you can see here as well is that the second 1, 2 over here has a very long corrective structure, while the move towards the upside is incredibly short in time, right? So the move up in time, very short. The move down, the corrective 2, is very long. If I take a fib time from the low to the high here, then you can see that the corrective structure to the downside is over 6 times longer than the move here towards the upside, which is not what you like to see. So therefore, it also lowers the probabilities for a multi 1-2, besides the fact that you now have a triple 1-2. We're waiting for a big wave 3, which at the moment doesn't really look that likely. And also this wave 2 here is even longer than the first wave 2, even though for the more experienced Elliott wavers, this wave 2 here is of course a lower degree wave 2 compared to the first wave 2, but it is twice, triple, quadruple the length in time of the higher degree wave 2. So it's not great probabilities for every single impulsive scenario, being the impulse, diagonal, or the multi 1-2 at the moment. If we then look at the CVD divergences, then all of these CVD divergences locally have played out. We had bullish CVD divergences as price has been moving towards the upside. They played out. We had a bigger divergence here on blue, higher low in price, lower low on the CVD. However, also locally here, that was interesting. Higher low in price, lower low on yellow as well as on blue. Nice bullish CVD divergence. Price grinding to the upside, creating some more bullish CVD divergences. As you can see, bullish CVDs played out, bullish market structure, very nice to see. The bearish CVD here, not interesting. And besides, after creating the high, we also touched the 886s over here and again over here. So the bearish CVD was never really too interesting. At the moment though, we don't have any CVD divergences. We are currently moving up. There is some volume coming in as well. So one of the best things to do is of course to wait for a bit of a range to form. If we then look at the probabilities of the different scenarios shown in this video, then on the 1 hour time frame, the probabilities at the moment are highest for the bearish scenario, which is what you see here on the chart, either the ABC or the WXY. We got to wait a bit for some signs of weakness, price to hit some resistance levels, which we have towards the upside. We have over here a point of control that we're getting close to at 68.4, value area high at 68.9, and then we have a daily as well at 69k. If price manages to take the high at 69.5k, then please be aware of the 70.9k level, which is also in confluence with the most common wave B target for an expanding flat. So that is of course quite interesting. On the number 2 spot, we then have a bullish impulsive continuation to the upside, which is what you basically see here, a finished 3-wave structure, and up we go. On the 15-minute time frame, the move to the upside here so far counts better as a corrective structure to the upside, being a WXY zigzag family structure. Now, generally, the move of the lows counts better as a corrective structure. This increases probabilities for the bears on both the 15-minute and the 1 hour time frame, so that can be the flat or the WXY. Please be mindful, however, that the move down from the high here at 69.5k is best counted as a 3-wave corrective structure. That means that if you would zoom out and not focus so much on all the lower time frame stuff, the probabilities are higher to take out this high. So that is something that you got to be aware of. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.